Binance Future Trading for Beginners. Hello everyone and welcome back. In today's video, I'll show you guys step by step on how to trade futures on Binance. We're gonna be covering everything you need to know. So after watching this video, you'll be ready to make your first trade in the futures market. If you don't have a Binance account already, make sure to check out our other video on how to get started with Binance. Now, the first thing that you're going to do is log on to your Binance account, and you need to understand some basic key differences between USD and then CoinM futures. So USD-M, which means US dollar stable coin margin futures, is based on the USD prices, whereas CoinM futures stand for coin margin futures. So if you trade coin margin futures, you're going to be using coins like Bitcoin or Ethereum as margins for your trades. So let's jump right ahead. So let's get started with futures trading on Binance. Now, we all know the basics of futures trading on Binance now. We are leveraging money. We are trading with USDM futures or CoinM futures, but USDT options are also available, which are known as options under Binance. So let's go on ahead and take a deeper look at all of these different types of trading available. So to get started, you simply have to log on to your Binance account. And once you have logged on to your Binance account, you will see the option for futures trading over here. You can click on the type of futures trading that you're looking to do, and you will see that there are actually copy trading options with leverage available currently as well. So you can copy trade with futures. You even have trading bots in the futures market as well as leaderboards, and they have a really nice value proposition. But let's get started with the basics. So, what is the difference between futures and what is the difference between USDM or CoinM futures? Well, first thing to know is that futures M stands for US dollar stablecoin margin futures. And as you can tell by the name, these futures are settled in a US dollar stable coin, specifically in Binance. So that's either USDT, which is the US dollar tether, or BUSDT, or BUSD, which is the Binance US dollar. Now, secondarily, we have CoinM futures. What are CoinM futures? Those are coin margin futures where they use things like Ethereum or Bitcoins for their trades, and you're going to be leveraging those. So you have Binance leverage tokens or Binance options as well, which we're not going to be going into a lot of detail. So let's get started. First off, let's take a look at the basics of the trading interface on Binance. So you can go on ahead, go into your futures market, and you will see within this you have USDT perpetual as well as USDC perpetual, USDT delivery, CoinM perpetual, and CoinM delivery. So depending on the market that you want to trade in, you can simply click on the market and you will see the trading interface. So in this futures trading tutorial, I assume that you probably have done a little bit of spot trading and you should know this as a beginner. If you're trading with futures, you definitely do need to practice a little with spot trading. So make sure to check out the beginner's tutorial if you haven't ever done spot trading, because the interface itself is very similar, but it's slightly different. So first off, you are going to have a price chart at the center, which you can actually switch from to the original view or the trading view, and that way you can use some of their technical analysis tools on the right side. Then you also have a order book with the most recent trades, as well as a window where you can place your orders. Now, you will see that if I go into the trading view over here, I will have a slightly different graph, which will actually show me some of the market trends. And then in the original view, I can zoom in or zoom out into a time period. Now, in our order book, we are seeing the buying and selling price. And on the right, we can put in a stop limit. We can put in a market trade. We also can put in a stop limit, stop marking, trailing stop, post only, scaled order, or we can also choose if we want to go with cross or isolated margins. So in cross margins, all the positions under the same margin asset share the same cross margin balance. Whereas isolated trades are different, where you're going to be risking on individual positions by restricting the amount of margin that is allocated to each. So, if a margin ratio is reached at 100%, the position itself would be liquidated, and the margin can then be added or removed to the other positions. Now, over here, you can adjust the leverage that you want. So, selecting higher than 10x leverage increases your risk of liquidation. So, always try to manage or, manage the leverage that you are taking. Then you also have TP and SL. So, take profit and stop loss, which always helps you in reducing any type of risk. And you also can choose to reduce only. Now, other than that, you also have a futures wallet that you have to fund before you can actually start trading on the futures platform. So you will see on the top, we have different futures options, but what you're going to do is on the top right, you can see you have your USDM futures, CoinM futures. So click on the wallet and then click on futures, and you will have the balance of your account. So your margin balanced and then your wallet balanced and then your wallet balance. So over here, you can click on buy crypto to purchase crypto, or you can directly click on deposit to deposit crypto or purchase USDM or CoinM. One thing to note is that your stable coins or any of the fiat that you have in your spot trading wallet is going to be segregated from your futures wallet. So your spot wallet or your regular wallet is different from your futures wallet. So you can choose your USDM or CoinM futures wallet, and if you want to fund it with USD stable coins, you can simply go on ahead and choose to transfer, and then you can directly transfer it from your fiat and spot wallet into your futures wallet, and you can select the token that you want. So you would select USDM from here and then select the maximum amount that you have, or the maximum amount that you want to transfer. And just like that, you can transfer over money from your spot account to your futures account. Now that we are ready to choose our futures contract, we can get started with trading. So let's quickly go over what a future actually is. A future is basically a contract saying that we will buy or sell a specific asset at a set price at a specific time in the future. So for example, when we are trading a Bitcoin for the future. So let's go into our futures market over here. And when we're trading Bitcoin futures, we are not actually buying or selling the Bitcoin itself like we would do in the spot market. Instead, we are just entering a contract saying that we will buy or sell Bitcoin in the future. So, for example, if we go for long on a Bitcoin future, we expect the price of Bitcoin to go up. So we enter a contract saying that we'll buy Bitcoin at a later date, but at a price which is determined right now, and which is usually close to the current price. So let's say we're going long on a future contract for one Bitcoin at a price of, let's say, $25,000 per Bitcoin. So on the delivery date, which is when the future contract expires, we'll have to look at the price of Bitcoin to see if we actually made a profit or if we have lost the money. If at the delivery date, the Bitcoin is trading at $30 per Bitcoin, we've made a profit of $5,000 because we have locked in the price of $25,000 per Bitcoin when we entered our futures contract. On the opposite side, if at your expiry date, Bitcoin is only trading at $20,000 per Bitcoin, you have lost $5,000. So, unlike you would spot trade, futures contracts allow us to profit when assets are going down in value as well. If we expect the price of Bitcoin to fall, we will go for a short on the future. So, the current price of Bitcoin is 8,000 whatever the current price of your Bitcoin is. For example, let's say it's $25,000 and we go short on Bitcoin. That means we agree to sell Bitcoin once it is at a lower price. So we're basically speculating if the price of the asset is going to go up or go down. So let's say we would sell or short the Bitcoin if it goes to 20,000. So until the delivery date of the future, we will make a $5,000 profit. And if Bitcoin rises to 30,000, we lose $5,000. And if it actually drops down to $10,000, we would make a a $10,000 profit. So we actually are speculating prices, and in practice, we don't actually need to wait until the exact time of the. So in practice, we don't actually need to sit down and wait for the price of an asset to go up or go down until the contract expires to get out of our position. If we want to close our long position, all we need to do is open a short position for the exact same amount, and that will cancel our long position, getting us out of the trade. The profit or loss is less than equivalent to the difference in price between when we open the long position and when we close the long position. And even though we might enter a future contract about buying or selling Bitcoin or any other type of asset, in practice, you don't actually need to buy or sell that asset itself. Instead, you can just use any available asset as collateral, also called margin, or to fund our trade. And you are going to pay up when you close your position. So as we've already seen for USDM futures, that would either be US dollar tether or BUSD, which is Binance US dollars. And for coin M, we can use cryptocurrencies. Now, we also have some basic differences between perpetual and delivery futures. So if I have the stablecoin USDT in my futures wallet, I need to make sure that my USDM futures are selected. Then you can type in BTC USDT, and a ticker for Bitcoin and USDT is going to show up, and it's going to be in that perpetual future contract, and you will have a quarterly future contract. The quarterly futures are the ones that have a delivery date or a expiry date, which is the date when our position will automatically be closed. So you can choose any date that you want, and you also have a margin ratio in this. So on the right over here, this is our margin ratio. If I actually put in an amount over here, you will see the margin ratio, the risk management, and we're not going to do this, we're going to leverage. And then you'll see our margin ratio. This is currently in single asset mode. You can even go into multi-asset mode. Now, what exactly is this margin ratio? Well, margin is the amount of money we must have in our futures wallet to protect both the traders and Binance from possible losses on trades. So the margin acts as our collateral on our future positions. Now, the margin ratio is our indicator to see how we are to get our future position liquidated. If the margin ratio hits 100%, liquidation is going to be triggered. And liquidation basically means that your margin balance is too low to fund the positions that you are putting in. So the system is automatically going to close them, and you're going to lose your entire margin balance in the process. So if we go long on Bitcoin, but the price keeps on declining, then the required margin to keep our position open might be higher than our available margin balance, which at that point would make our margin ratio hit 100% and all of our positions would be closed. So to make sure that we can cover our losses with the margin balance that we have, the goal is to avoid liquidation and manage risks, and to make sure our margin balance is always higher, is always available for us to be able to fund our positions. Now, with single and multi-asset mode, this is single asset. If I go into multi-asset mode, it's going to work differently. You'll see position values, actual leverage, account equity, and account maintenance margin as well. So this is going to work slightly differently. And this is if we switch from the single asset mode to the multi-asset mode, all the other assets in our futures wallet, like for example, Bitcoin or BUSD, will also be counted towards our margin balance. And by the way, the P&L, the profit and loss of our open positions, will also be considered as a part of our margin balance, which means that if it hit 100%, the liquidation would be triggered and all of our open positions would get closed at the same time, and we'd lose our entire margin balance. In single asset mode, we'd only use our USDT margin balance, but in multi-asset mode, we lose all of our assets in the futures wallet as well. So that is why I always recommend for beginners to stay in the single asset mode to make sure that they are managing their risk a bit more effectively. Now, you also have cross and isolated margins, which are another really important thing that you need to know about before you are actually making trades. So, what exactly is cross or isolated margins? And this is not something you see in your futures market, but you also see this in your spot market as well. So, what is cross and what is isolated? Well, there's actually a setting that we can use that allows us to have a separate margin balance for each of our positions. So, if that one position declines and triggers liquidation, then we would only lose the margin balance for that one position and we'd be able to keep our other positions open. So this would allow us to make sure that we don't lose our margin balance for other positions. So when you go into cross margin, that means your entire margin balance, which is however many USDT that you have, is going to be risk. However, if you're looking to risk only one position in, then you can go on ahead and use isolated margins. That is going to help you in ensuring that one position is, even if one position is more risky and you're leveraging more on one position. So if we go into our futures market here, and in our futures market, if we choose to leverage more on a certain trade, we can put this as a isolated trade instead of using this as a direct or a cross trade, because that would yield more risk and make our margin ratio reach 100 if we do end up being incorrect. Now, Binance also has a futures calculator, and whenever you are placing an order, you should use that calculator to see some important metrics before you place the order with a specific amount of leverage. So you want to look at the liquidation price of your trade. If this open position is actually going to hit the liquidation price, then how much of your assets are going to be liquidated. So these are all of the basics. You also do have these trading bots and copy trading tools that allow you to make this really easy as well. And you even have different markets, futures data available that can help you in trading in the futures market with Binance. Now, moving on, now that we have covered the basics, we can get started with our first trade. So we can first off choose the contract that we want to trade. I want to go with BTC and USDT. Now you can see I'm currently in the perpetual market, obviously. This is just perpetual prices. And once we have chosen the token that we want, you can select our leverage from here. So I'm going to add 10%. Then down here, we can see exactly how many Bitcoin futures we can buy with our current margin balance and a 10x leverage. So obviously I haven't funded this account, so it doesn't have any assets, but when you are funding your account, you will be able to actually scroll down and see how much of the token itself can you actually contract from here. So if I was to say, you choose, we have $100, then it's going to be 10 times $100 around that. And then after that, you can choose your order type. So if you want this to be a market order, which means that our order is fulfilled automatically, or if you want to go for a best price order. So a best price order is that it's going to find the best price available and then make the exact dollar amount trade. And you can even use, some of the higher margins when you are doing these perpetual trades or these futures trades, which are isolated at a certain position. Now, you even have your position overview, because whenever there is a market order and it is fulfilled automatically, we can see any of our open positions at the bottom. And this is going to show you any of your open positions if you applied leverage, which you can adjust anytime by coming back up over here. Then you have the current value of your position and your entry price, and we will see the so-called mark price, and this is a reference price that Binance uses for liquidations. Now, moving forward, we also need to know what closing positions are. So if we want to get out of a trade and close your positions, there are a few ways that we can do that. The simplest way is to simply click on market, and then we're just going to close the position immediately with the best price possible. Or you can set a target price and click on your limit, and this will put a limit sell order in the system. So you can actually see stop limits over here, and you can set up limit sell orders in the system. And once the future price hits the limit, your position is automatically going to be closed. So you can cancel any of your open orders by clicking on the trash bin as well. You can do that if you want to close your orders. Another way to close your long position would be to simply place a short position for the exact same amount. So we can come over here, enter the size of our open long position, and then go short and then sell short, and then the inverse would be applied, so your open positions would be closed. Now, moving forward, you might also want to reduce a position. If you don't want to close the entire position, you can also just reduce it. So to do that, you can look at the current size of your position, cut that amount in half, and then click on your market. So if you were longing it, you can put in a 50% of the value short order, and then your position is going to be shorted by 50% immediately. And if you only want to reduce only, you can activate the reduce only option, in which the system will only allow us to reduce your current position. So if you have an open long position for Bitcoin, and when the reduce only option is ticked like so, if I tick on reduce only, we cannot put in a sell order of a larger amount than our current long position, because that would mean our current long position would not only be canceled out, but it would also change into a short position, which is not going to be allowed in reduce only activated. So again, like the name says, whenever the reduced only is ticked, we can only make our position smaller or cancel it together. So it's basically just a safety feature to make sure that we do not make any mistakes. Now, if you want to increase your position, let's say we want to double our current long position, then all you have to do is look at the current value of our position, enter that amount for the next order, and then simply click on buy long, and your position will be doubled. You can also open a sell/short position. So if you want to short Bitcoin and you believe the Bitcoin price is going to decrease, we're going to stick with our cross margin. We can go with a market order. We can choose the size of our BTC, reduce only, choose your leverage, and then from here, predicting the price, you can click on over here and click on over here and then sell short. So, we can proceed like so if we're shorting Bitcoin. Now, another really important thing is to set up take profit stop loss. So if you tick this option over here, this is the take profit stop loss option. This is available for us to manage our risk. We can also take profit and stop losses for each individual position we have. All we have to do is click on our individual position that you will have at the bottom, and then you can edit that. And then you can set your take profit price, which means that when this specific price is reached, the position will automatically be closed and our profit would be locked in. We can approximate profit and we can expect our target price. For the stop loss, we can do the exact same thing. So we can just set a target price, when we want our position to be closed at, and we can just confirm or make sure that our losses do not go below that level. We even can set a limit order. So until now, we've only been using market orders, but we can also do limit orders as well. If I go into the limit section here, this is going to be switching from the market. This is our market order, and then we can go back into the limit orders. These work slightly differently. We put in the order by going long or short, and it will be visible right here in your open orders tab. It will stay in the futures price. It will stay in the futures price until it reaches our entry price that we have just set, which will be set automatically to open our position at a specific price. You can also do stop limit orders. So this is going to help you set a price range for when you'd like to open your position. For example, we can tell the system that we want to go long for the Bitcoin future price when it goes up to 25,000, willing to buy in between 25 to 26,000. Using this really makes sense because whenever the market is very volatile, we're giving the system a price range it's allowed to open our position in. If we just use a normal limit order, the system is only allowed to trade at our specific entry price. With a stop limit order, the system is allowed to take the best price within the price range that we have set. So this allows you to get the best prices in a volatile market as well. There's also the stop market order, in which we're telling the system at what price our market order should be triggered as soon as our stop price is reached and the current best price is available. We also have trailing orders. So if we go into this section, we have the trailing stop over here. This is different. It has a callback rate activation price. So this is a great tool to use in a situation where our position is already profitable and we just want to make sure to realize that profit. At the same time, we think that there's more upside potential. So a trailing stop order is a order type where the stop limit is moving with the price, but only in one direction. So for example, we're currently in a long position for Bitcoin at $25,000 and we are already $1,000 in profit. Because we entered a price of 24,000 and we decide to put in a trailing stop with a callback rate of 2% and we go short with the same amount of our current long position, then the trailing stop would be set below 25,000, and if Bitcoin falls below 24,500, it would reach our stop limit and the short order will be triggered, which means that our long order position will be closed, and in that case, we've still made a profit of $500 with our trade. So these are just some of the basics of Bitcoin and of Binance and how you can actually trade in Binance within the futures market with these basics. I hope you guys found this video helpful, and if you did, make sure to leave a like and subscribe. Make sure to share this video with someone you think would need it, and have a great day ahead.